Hello, everyone. Welcome back to the channel, Matt with Green Bar Trading, and welcome back to another weekly watch list video. I'm going to dive right into it in a second here. Before I do, please hit the thumbs up for the video. It is very early on a Sunday morning making the video for you guys, preparing our community for the week ahead. So hit that thumbs up for me and let's just dive right in. Why waste any time right now? So this is what we're looking at the moment for earnings for this week. Now, before I get started, keep in mind on Friday, the stock market in the US is closed for Good Friday. So keep that in mind. When trading, we have a short week. These are the earnings. Earnings season is starting. And I know you're probably saying we just had earnings, for the last month or so. Well, that was the back end of those previous earnings. Now every earnings season starts with the airlines and with the banking sector. And I think it's so important. It's always important for earnings season. This is going to be so key, especially with what we already know about the Fed, what we already know about what they're going to do with their balance sheet, what they're going to do with the interest rates. We know that. We know inflation's high. The stock market has all that priced in. The reason for the volatility is we're trying to figure out what is a good price for these stocks? What's a good valuation? The only way to know is to see what their earnings show and what their guidance is going to show, what the CEOs say about business. If growth is looking good and earnings are rising, then that's going to start to put a floor under the market. Because right now, it's just all over the place. And I'm sure you guys can see that, especially if you're trading. It's very difficult to, swing trade some of these stocks. Economic calendar. This is what we have for the week ahead. If you're planning a week, always look at, the economic data. You want to know when the most important things are coming out. Right here, we have the CPI, yes, another inflation number coming out on Tuesday at 8:30 in the morning. The expected is 8.4. That's crazy. So these are really high numbers. And Wednesday, you have the PPI, which is the producer price index. So you have inflation data. You have a short trading week. Don't try to be a hero this week. It could get a little messy. Just, manage your risk. So we went over the earnings. We went over that. Let's dive into what we call our compass. Where are we going with the overall market? So let's zoom in. This is the SPY. For those that don't know, maybe you're a beginner. The SPY is the S&P 500 ETF. We like to look at this. This is a really good gauge for what's going on for, all the stocks, not just the QQQ, which is the NASDAQ tech stocks. This has the top 500 stocks in the entire market is into this ETF. So this is something we're going to want to watch. It has seen good support here, even though the market has been really, really tough, especially on the small caps and the NASDAQ. This is kind of holding up a little bit. 444 on the SPY, very key level, very key area. Very bearish sign when something breaks over the 200 and then breaks back and closes under the 200. It's not the greatest sign. We're going to want to see You have a lot of these spinning tops here, a lot of candles of indecision. We're going to want to see whatever indecision is here. Maybe earnings give it a boost. We're going to want to start to close over this 200 moving average. We retested support. We bounced off of it. If support breaks down, guys, the next area here, and that's why I have this green going down to the 50 moving average, would be the 50. So that would be the next level of support. If that breaks and we see some real, continued selling, there's a good chance that we could, possibly head down to, previous lows down here. So really, going to have to watch this very, very closely. These candles here, these two candles are just showing that, investors are just not sure where to put the money yet. It's very, very choppy. That's called choppy trading days. On the Qs, this one is also scaring me. Seeing a ton of selling in the NASDAQ, obviously. I mean, this is a bad week for tech. We closed just at that 50 moving average. This breaks, well, then you have what looks like a double top, and it may come back down to this 20% correction zone. It could even get worse, because at this point now, you failed to really make a sustained move to a new high. It could have done it here. When we pulled back, and then this next leg up, which is what we were hoping for, it smashed its head on the 200 and then pulled on back. This was the time to have continued a rally. Instead, it looks like we just retraced some of this selling, bear market type of bounce, technical bounce off the 20%. And now it looks like we could be headed down lower. Breaking down here back under the moving average, that's definitely going to be a very bearish sign. So that's the Qs. Let's look at the small caps, because this one is just, clear as day, the trading range that this is in. Excuse me. But it does look like this is coming back down to about the 190 level, which is going to be not great for the market. And especially if the Qs continue to sell off, this one's going to come back down. Couldn't break here. Broke and then dumped. This right here is a false breakout. So at this point, you got resistance here, very clear. And then your support would be down here. So, the markets are just not, if you just look at the way that the markets are setting up, it's looking like it wants to go lower. But we're just going to have to wait and see. We don't have a crystal ball. This is just technical analysis. It's what I see. And, just looking at the charts and a lot of stocks, if we look at Microsoft, a lot of stocks are breaking down. This Microsoft should not be breaking down like this. These stocks can take the entire market down with their weighting. They're very heavily weighted. So you have what we see here, double top. Now you broke the 200, you broke the 50, closed under the 50. Okay, this is a close under the 50 moving average for Microsoft. So, very bearish looking charts at the moment. Nvidia, just a mess. Look at that sell-off. Gave you a breakout. All right, nice little day trades here, and then it just broke down. A lot of stocks are like that. Google, another one. This couldn't even get back to 3,000. It was looking like it wanted to go at the beginning of the week, this first day, and then we just sold off. All these stocks under the 50, under the 200, not good, not good at all. So this, to me, looks like it wants to come back down and retest now this 2,500. If that happens, that means that the market has also broken down. So you have to just watch. A lot of these stocks are looking like they're setting up for continued selling. So we're just going to have to wait and see. Okay, one thing I wanted to show you from last week was on our weekly watch list, our really solid call out here of DraftKings. We were coming into the top of this channel, which you can see here in what we had posted. I'll bring it up on the other screen. It gave a really nice shorting opportunity. Could not get and hold over that 50 moving average. So if we pull up this, I can show you guys what happened. So here on Monday, it smashed right into the top of this trend line, okay? And then just continued to sell off. So that was a very solid call out, very solid technicals, lower highs, lower lows, trading in a channel. This looks like it could come down and at least retest previous lows here at $15 a share. So DraftKings is still going to be on the radar. Once the selling pressure comes in, it can put these days back to back to back. So we'll just keep that on watch. Twitter got a nice bounce from Elon Musk. Everybody knows it could come back down and fill the gap to 40. It's just something that I'm going to keep on watch. You know, volume you can see has just totally started to decline after this initial, push up. It gets a couple of good days, and then it starts to come back down once people realize, all right, that's probably way overpriced at the moment for Twitter, especially in this environment. So that's why that one's on my watch list. JP Morgan, this one is on my watch list as well, just due to the fact that it has earnings on Wednesday, and it looks like it's bouncing off of support down here. So I do like the way this is setting up, and it was very oversold. A lot of times this is the way it'll roll. It'll come down and then we'll get a little bounce. So that could provide a little opportunity, but it is still in a very obvious downtrend, lower highs, and then you have lower lows. It did give a nice bounce here. So we'll see if we get some continuation on that. Okay, so now AMD. Technically, looking at this chart, you have sort of a descending triangle pattern here. You have clear support down here at 100. You have a clear descending triangle into this support area. Most of the time, this will continue to come back down. It'll give you a breakout. And I have a picture here to share with you guys. The triangle pattern, right? You have descending, lower highs, and then you have support, but it eventually gets to the point where it breaks out. Now, the breakout on this, as opposed to a flat top breakout, would be down. So, just keep that in mind with AMD. It's at support, but if that ever broke, if 100 ever breaks, this one could just fall down with the market, with the entire market. So that's why really at this moment, the cues are just really, really important. We're going to want to see some support at some point, but you don't have NASDAQ, you don't have tech earnings this week. So we'll just have to wait and see what happens. But a lot of stocks are at that very critical area. So that's it, guys, for me. It's very early on Sunday morning. Like I said, still sleeping, still sipping some coffee here. So hit the thumbs up for the video. That's what we're looking at for the week ahead. And I will see you back on the next one. Take care, guys.